Your retirement is being attacked by inflation. That's right, your dreams of sitting on a beach with gray hair, a good book, and a cold beer are under siege. It's time to strategize to protect your older years and conquer inflation once and for all. You've heard your grandparents talk about going to the movies when they were kids for a couple of bucks or 50 cents. They could buy tickets, a soda, popcorn. Boy, have things changed. They always say that to us, and we always, we don't really listen. But if you think back when you were a kid, movies and snacks were cheaper too. That's because of inflation. Inflation makes the price of goods and services increase steadily over time. It might not seem like a big deal when you're younger, but inflation's impact gets bigger and bigger over time. By the time you're planning for retirement, you're in a battle against inflation. You must understand your enemy before you can defeat your enemy. Well, that might sound like a fortune cookie nonsense. It's good advice when it comes to tackling inflation. Understanding how inflation works will give you the upper hand and making sure it doesn't affect you. The products you buy and the services you use cost more with inflation, but inflation isn't just about increasing prices. Inflation is the continual rise in the average prices of goods and services. The results in the decrease in the purchasing power of your US dollar, meaning you can buy fewer goods and services for the same amount of money. It's an indirect relationship, and prices go up over time. The value of money goes down, inflation increases, purchasing power decreases. Prices of goods and services rise at different rates, and we see these changing prices to calculate an average inflation rate. The cost of goods is compared annually, so inflation rates can be compared year to year. According to Trading Economics, the inflation rate over the last century averages about 3.25%. Some experts think it's as high as 13%. I think it's well above 10%. So what's causing inflation? There's more than one theory about what causes inflation. One is the demand pull theory. Increasing demand for goods and services drives prices up to prevent inventories from being depleted. Another theory is the cost push. If production costs increase, companies have to push up prices to keep up and make a profit. But the biggest villain of all is the monetary inflation. If there's an oversupply of money, like the value of that money is going to go down and prices are going to go up. As we know, we're in the middle of a money printing party. The Fed is printing money to their heart's content. And unfortunately, for as long as we're using this monetary system, we are now going to be with inflation to stay. And I think it's only going to get worse. So how is inflation affecting you? You're losing the value of your dollar. And I don't think wages are going up to keep up with it. And I think everyone would argue that that's true. As a national average, buying a house now will cost you in the whole nation at least $200,000. If you're buying in some of the California, New York, some of these states, the average household income price is $500,000 to $600,000. Go back to 1940, the median home value was $2,938. In 1980, it was $47,000 to buy a house, the average house. This is what inflation does. You gotta earn more, you gotta make more, you gotta earn more on your investment. So how do you fight it? We're not financial advisors, talk to them, come up with a strategy, do your research, but also keep in mind there's other options out there that could protect you against some of this inflation. But at the end of the day, fiat money is always going to go down in value. So you have the time and value in money. The money you have today has to be put to work for the future. The more you have, the greater potential you have to generate more money. The sooner that money is wisely invested, the longer it has to accumulate compound interest. Because of inflation, you have more purchasing power today than you will have tomorrow. That's why you should invest now. So here's the caveat. Obviously, all investments have risks. Some are riskier than others, but all investments have some level of risk. So you have to ask yourself, what is your goal and what type of investor are you? What level of risk are you comfortable with? Do you want to retire in 10 years? Or do you want to keep on working and secure your retirement? Do you want to build towards a $10 million portfolio, $100 million, $1 million? Are you a risk taker, or would you rather go slow and steady? These are real questions you have to ask yourself. Next, you need to know the different types of investments. You got stocks, ETFs, bonds, real estate. These are some of the investments you can make. And each of these assets, you can further diversify, which I always talk about. For stocks, you have dividend-paying stocks, penny stocks, growth stocks. For real estate, you can buy properties, or you can get into REITs, which you can get done through the stock exchange. Again, go to a financial advisor, get more detailed explanation on all of these things. What we always suggest is diversification. I personally invest in businesses, I invest in real estate, I'm in the stock market, I have cryptos, and I also have gold. Because as much as I like taking risks to beat inflation, I know I need an asset that is my last line of defense. Everything could crash, and we've been through this several times, and gold is something that will hold up. It's like buying an insurance policy. It's the best hedge. The stored value in the one asset, inflation never managed to take down. So keep investing, diversify, and keep your investments safe.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.